Just what is going on in the housing market? Well, in this video, I'll share some data for the Sylvania area, and I'll have one bonus data set, which I think you'll find interesting and a little bit different. What we're seeing are two main driving forces in the housing market right now. One is interest rates. We recently saw them peak a little bit above 7% for a couple of days. As I tape this, I'm seeing it maybe 6.8 or 6.9. And by the time you watch it, will have changed 100 or 1,000 times. So it's just a reference point. And what I'm talking about are 30-year fixed rate mortgages. And they've been recently probably between 6 and 7 for the most part for months. But when they jump up to 7, that does have a chilling effect. I think it's mostly psychological, but still it is more money. And if we could get them down under 6%, say 5.8, 5.9, I think we'd see a new drive for some buyers, especially some of those first-time home buyers that are discouraged by the prices and the interest rates. The other major driving force is inventory. Inventory has been weak for years, and it still is. And interestingly, it's so weak now that it offsets some of the higher prices and higher interest rates. But in more detail, let's take a look at Sylvania. Here's the number of houses we sold in the month of May. So the last data available, we sold 58 homes. And that's about the same. It's only 2 homes less than the same month a year ago. But what I'd like to do is skip back pre-COVID. I'm going to skip a couple of years of COVID and try to look back at 2019 pre-COVID, because now in hindsight, that seemed like a much more normal year. Now, when we were selling homes in 2019, we didn't feel that way. We felt like it was a really pretty strong market, doing well, and a market that could have used a little more inventory. But anyway, let's take a look at this chart when I add another year. So jumping back a couple of years to 2019, we sold 89 homes. So what we're selling now is about a third of what we were able to sell back when things were a little more normal. Big difference. The other main metric I want to share with you is pricing. This chart shows you the price per square foot. Now, I've tried to take price per square foot because a big house is going to sell a lot higher than a small house. And this takes some of that, adjusts some of that noise out of the equation. And we had a house sell last month over $1 million, and we had houses sell under $100,000. But on a square foot basis, we sold last month $141 a foot versus a year ago $140. So just a slight uptick, not a big deal. But look at 2019, $104 a square foot. So the market's up on this metric over 30%. And what I would share with you is when I dig down into this year's data, we are selling older homes. So even though I tried to account for the size of the home, when I looked at the average age of the 2023 sales, I was 13 years older homes than the homes that we sold on the average in 2022. That's a big difference. Now, I'm a year older. My kids enjoy telling me I'm a year older. I'm not sure why. Your house is 1 year older. But when we look at the 2 years, we're seeing a 13-year gap. And that's because apparently we're putting more older homes on the market. If we had newer homes, I'm sure we could sell a lot more newer homes. But we're selling what we have to offer. My point to all this is if the price went up $1 per square foot on an average home that's older, the price on most everyone else's home has gone up maybe significantly, maybe 3 or 4%, which isn't going to show up quite in this metric because I don't know how to adjust in a simple way for the age of the home. So I would say prices are up on your home. If you want more details, please get with me. I can give you a much better market analysis. Even price per square foot has some real disadvantages. It doesn't take into account things like finished basements, outbuildings, the size of the lot, and many other conditions. But it's a starting point. So let's take another look at something that's kind of unusual. I don't see anybody else reporting this, but if I looked at how many homes are selling at or above the asking price, we are in the high 70s. We sold them 79% of the homes we sold last month were at or above the asking price. And that's even a little bit better than 22 and a whole lot better than 2019. So I would think maybe a real normal time would be maybe only 25% of the homes would sell over asking price. But this shows that the market's strong. It's strong for sellers. And I'm going to keep tracking this to see if maybe when it starts to moderate, we can expect prices to get more in line with buyers and sellers in a more balanced market. So let me move to one more chart. This is a screenshot from a website I really like called Altos Research. And I'll put a link in the comments below. Altos has their method of measuring market indicators and coming up with an action index. So this little dial shows how we are at this point in a very strong seller's market. And according to this, in their research, they're thinking it's even slightly stronger than last month. And we'd have to go down to here to get to a balanced market. So we're not very close to that. I think that sooner or later that will come, but I think it might be a little later. I think it's going to take time for everything to settle out and for us to reach a more market. Now, the other thing about this is for the zip code 43560. So it's a little different metric. On the earlier charts, I was trying to show all of Sylvania Township, but 43650 shows the city and only part of Sylvania Township. So there's a little apples and oranges going on, but I think it's all pointing in the same direction, basically giving us the same story. So I hope you found this helpful. I hope to talk to you soon. If you want some more information, if you want to get my seller's guide, please reach out to me. Please comment below. Thanks for watching to the end, and I hope to talk to you soon. Have a great day, and until we talk, I hope you slay some dragons.